In this video, we're going to start off by looking at the continuation patterns. As a reminder, the continuation patterns can be both bullish and bearish, which if you have a look at the slide, you can see them split up. So we're going to start off with the bull flag versus the bear flag. So if we go through onto the next slide, this is an example of what a perfect bull flag would look like. Now you'll notice there are three different types of flags on this slide. The first one is completely 90-degree angled to the right. So price moves up, consolidates within a tight channel, and then later on leaves that channel continuing towards the upside. Now remember, you can actually work out the measured move off of each of these flags. This is going to be your pole, and you use that pole to work out the next move when it does eventually break out. We'll give you more details when we go onto the actual live trades which have taken place in the past, but this is all you need to know. You'll also notice that some of these flags are slightly slanted towards the downside and others are slightly slanted towards the upside. This is dependent on what's going on with the market conditions, but the main point over here is that it is a flag. You can see over there, it's holding up to a 45-degree angle either towards the downside or the upside. It's still a flag formation and you can expect continuation. Now, if we look at a real life chart pattern over here, this is taken from Bitcoin on the 1 hourly chart, and ultimately the way that price moved over here in the beginning of 2023, you can see price moved up aggressively, creating that flagpole which you can measure out. It then consolidated. Your job as a trader is to recognize when this flag consolidation is starting to take place and look for ways to time your entry into the bottom of the flag. If you can get your entry into the bottom of the flag, you can drastically reduce your risk. So this would be an example of that entry. Your stop would go below those daily candle closes, and you'll learn more about timing that entry on a future lesson when we cover entries, stops, and take profits. So price then proceeds to move onwards and upwards in one major expansive candle. It moves all the way to the top side. If you took the measured move, that was a 5.58% distance from the bottom to the top. You would copy and paste that into the top side, and that gives you the measured move of the flag breakout. You can see price then moves into yet another flag. Although it had not yet hit the top side of the move, it consolidates again, giving you a chance to get another entry, and this one meets the ultimate target. So when you consider this long trade setup over here, the first one was a 12.37 risk to reward ratio, and the next one was a 9.19 to 1 risk to reward ratio. Both targets were met, and price obviously continued on further from that point. So when looking at the chart, sometimes you might see that patterns completely leave the formation, but the point is, as long as most of the candlesticks are closing within that formation, the formation continues to remain valid. So this was the best pattern of fit at that particular time. This was a bull flag, which led into a more picture perfect bull flag. They're not always going to be picture perfect. Remember that it's your job as a trader to find the best fit. Now let's take a look at the bear flag. The bear flag will work in exactly the same way, just in the opposite direction. So if you take a look at this formation over here, price comes down very aggressively, bounces, creates a lower high, equal lows, equal highs, equal low, equal high, and consolidates within that flag formation. So this is a perfect bear flag because it's to a 90-degree angle, and then ultimately price continues towards the downside. Remember, same thing as with the bull flags, the bear flags can be slightly angled towards the top side. When many market participants may think that price is reversing here, creating higher highs and higher lows, you need to be cognizant and aware that this is still creating a flag formation, which has a much higher probability of breaking towards the downside. The same is true on this one over here, but this is where price action is really bearish, giving bulls no chance to send price back up. So you have a strong move towards the downside, price then bounces slightly, creates another lower low, lower high, lower low, lower high, and then ultimately breaks down even further. So now let's take a look at a real life example of one of these bear flags playing out. And I'm going to use this example over here, which is Bitcoin on the 3-day time frame. This is a high time frame bear flag. You can see price set in an all-time high around that $68,000 mark all the way back in 2021. Since then, it was a strong aggressive move towards the downside. Price bounced, creating a higher high, a higher low, another higher high, higher low, another higher high, and then ultimately leads into a major breakdown towards the downside. So So I remember very clearly at this particular point in time, a lot of market participants were very excited, thinking that this was just a cool-off period after a major move up, and ultimately we were going to continue onwards and upwards. But if you had a look at how price was rejecting into the top side of this flag, you would be able to identify that it was indeed a flag formation. Price then comes down, and ultimately, using your knowledge from the candlesticks, which you learned in the previous lesson, you can see the formation of this candle that took place over here. It's got a long wick, and it's the first candle that's closed outside of the flag. That essentially starts to open up the trigger to confirm that your short thesis is correct, and price leads into a major breakdown. Remember, you can work out the measured move. You take the flagpole, which is this section over here, and you copy and paste that from the top side of the flag all the way to the bottom. This brings price down 64.39%, which was an absolutely enormous move towards the downside, and it didn't even move into the red zone at all. It was straight down from there, meeting the exact measured move target. So now you know how to identify both a bull flag and a bear flag, and I just want to remind you that these occur across all different time frames. They work on high time frames as well as low as a 5-minute chart. So make sure that you go out there and look for the flags, try and identify them. They have quite a high hit rate and they can make you a whole lot of money. In the next video, we're going to go through the bull pennant and bear pennant, which is very, very similar to the flag formation. It just has a bit of a tighter consolidation. So I'll see you all there.